Hey folks, Bob Desmond here over at the Contrarian Trader, and welcome to our best stock charts for the coming week. We're going to talk about DOCU, which got killed this past week on earnings, DKNG, DraftKings, the ARK Innovation Fund, Twitter, and we're also going to talk about MSTR, MicroStrategies. I did the week ahead commentary yesterday with members, and I discussed several of the names I've already talked about, but I did not discuss MSTR. I ran across it last night because I was looking at Bitcoin, and Bitcoin was getting hammered. Who has a tremendous amount of exposure to Bitcoin? MSTR. What did MSTR do last week? It broke down. That was before the flash crash on Bitcoin. So that is our only short going into the new trading week. What's our position on the market? Well, I go into it in great detail with members on the week ahead commentary. It's posted in the members area. I go over all these charts, weekly, daily time frame. And I'll also have listed in the members area our entry points, profit target points, as well as our stop loss points. Now, how did we do last week? We did very, very well. We had one loss, very small loss. That was on CRSP. And we'll talk about that in a moment because we don't always want to talk about our winners. But we did book profits in ETRN. Now, we entered this trade because energy stocks were doing very, very well. But ETRN started to weaken up along with oil, gas, the energy sector. And so I said, you know what, we need to preserve our profits. And we stopped out of ETRN. We did not take a loss here. And after stopping out, the shares just kept falling. So it's good in this type of market environment. Even if you're getting paid, we got into this trade when it was yielding 6.5%. It's yielding right now 6.26. Dividend yields are not worth holding on to a stock that goes into free fall because you can lose 6.5% in a week, in a month. So it doesn't make sense. If the shares are going in the wrong direction, you put it in a double top here. We broke down to new lower lows. You got to get out. So ETRN, we booked profits in. Where we did take a loss was on CRSP. Now, we only opened up this trade on Thursday. Why did we open up the trade? Because we saw a bullish key reversal bar on Thursday. The shares have been beaten to death. You know, if you take a look at a weekly chart of CRSP, you know, the high was 220.20. That was much earlier in the year. Double top. We broke down to new lower lows. Ever since, we've been in a downtrend. We've hit a point now where CRSP is where it was trading prior to the outbreak of COVID. And COVID was really the proximate cause of as to why CRSP really went on this tear. It's in the genomics sector. What exactly they do, I have no clue. But they benefited from COVID, and that fear is now over by and large, despite the fact that government wants you to be afraid, be afraid, be afraid. We don't do that here. We're looking at the charts. The charts are saying, don't be afraid. Don't worry about it. You're good. And now the shares are trading down below, literally where they were in December of 2019, immediately before the COVID sell-off. So I like the setup here, but weak stocks tend to get weaker. I'm not seeing a reason on a weekly chart as of now as to why I'd want to be a buyer of CRSP, why I would want to hold on to a losing trade, because we did. Going back to the daily chart, we opened up our trade here and realizing that the market was weak, CRSP was weak, and that we may have a short-term bottom here. The entire market did a bullish key reversal bar on that Thursday. As a matter of fact, I discussed it on Thursday Night Stock Charts Live, posted on YouTube and on Twitter. You can go check it out if you like. And I thought we might get a rally. We didn't. We undercut Thursday's lows. It's a very bearish event. I had told members, get out on a new break to a lower low versus the lows of Thursdays. That's what we did. We got out. Sure enough, the shares kept on falling. So it was wise to take that loss. First out, best out. This is why when we open up a position, we never go jumping in and buying our intended allotment. Let's do a hypothetical. I want to buy 100 shares of CRISPR. I'm not going to go in and buy 100 shares simply because I have a daily reversal bar. That doesn't make sense. I'll buy 25, max 33 shares. It's a third of my intended position. And then I'll add on strength. I want to pay up. I want to buy more on strength. After my thesis of the shares bottoming out and are beginning to move higher, that thesis is validated, then I'll buy more. But if I'm wrong, you got to get out. Just stop out and don't let your ego get in the way. Simple as that. Because remember, we are our own worst enemies. We can blame the Wall Street banks. We can blame CNBC. In the end, if you take a look back at some of your mistakes, in all probability, you were in control. You made the decision. And sometimes our egos get the best of us. As long as I've been doing this, folks, it still happens to this very day. It's much rarer than it was many, many years ago. But from time to time, it could still happen. So let not your heart be troubled. Let's talk about our options trades, our earnings trades. We continued with earnings season last week, and we traded very successfully. So last week, our earnings trades, we use a strategy called a strangle, selling a deep out of the money call and a deep out of the money put simultaneously, and we collect a premium. We get paid. We do not buy the options. We are the casino and not the gambler. So that has been our strategy the entire earnings season, last earnings season, the earnings season before, and we do very, very well. So last week we booked profits on CRM, Salesforce.com, CrowdStrike, we booked profits there, Snowflake, we booked profits there, and we did very well. At a minimum, we booked 60% profits to 80% profits on these trades. So a very good week. We have a couple of new earnings trades coming up this week. Broadcom is one, Costco is another, maybe AutoZone, not quite sure yet. We'll have to see how those options look. Let's talk about our watch stocks for the new trading week. Folks, before we go into our watch stocks for the coming week, we're going to be going live tonight, 6 p.m. Eastern Standard Time on YouTube. If you're going to watch us on YouTube or Twitter, click the notification bell on YouTube if you're going to watch us there. Get notified when we go live. I also have a link below to my free 5-part video tutorial on my top 5 favorite candlestick patterns. If you enter your email address to get those free videos, you'll also get notified 15 minutes to a half hour prior to us going live tonight. So take advantage. It's free. There's also a 15-minute to a half hour notification opt-in email list. We hate spam too. Don't worry about spam. We don't do that. All right. Let's talk about our watch stocks. Now, these are all going to be extreme oversold stocks. Why? What qualifies them? What qualifies them is that we have RSI down below the 20 mark. But that's only part of the story when you're trading these stocks. RSI down below 20 is just a qualifier. It doesn't mean you go running in and buying the shares. What we want to do is identify historical support levels on these stocks and then go entering. And I went over those with members, those historical support levels on a weekly, I think I use monthly charts with members on the week ahead commentary. If you're not currently a member, please sign up for the 14-day free trial offer. It's free. And you also get TrendSpider for free if you sign up for the silver and gold level or gold level member. You don't need both. All right, let's talk about Docusign. Docusign got hammered on earnings. So I feel bad for those that are involved with the stock right now, but unfortunately, where we see a lot of damage done technically, as a contrarian, we see opportunity. So the shares were just simply hammered on Friday. We closed out the session with RSI at about 13 handle, 13.59 on Docusign. We're trading down below the third standard deviation Bollinger Band. In short, we're not supposed to be there. That's how much forced liquidation there was of Docusign. We broke below not one support level, but 1, 2, 3, 4 support levels. A lot of damage done. Here's the price action on Friday. You saw a slight bounce off of this volume shelf. Now, why is it that we want to take a look at a stock like this? that is simply getting hammered? Well, the market is very, very weak. Could we get a Santa Claus rally? No doubt. But it's a weak market. It's a very expensive market. I like to look where the damage has already been done. A lot of bad news has been priced into Docusign. The downtrend is unsustainable. Soon you will see a counter trend rally, a short squeeze, a short covering rally. And I don't plan on holding any of these stocks, or in one case we have a fund, for any length of time greater than a week or two max. These are short-term swing trades, in, out. We move on to the next one. So Docusign looking very good. Again, folks, in the members area, I'm going to post our entry points, exit points, and stop loss points. When I say exit points, I mean, what's our profit target? Where do I think that the shares are going? And in the case of Docusign, I'll share with you where I think the shares are going to go on a short covering rally. Let's make the assumption that Friday was the bottom. If that thesis is correct, and I'm not making that call, we're just setting up a speculative bottom here to identify where we might think that the shares are going to head. I think that we're going to head up here to the 177 mark. That's a very, very big move on the shares. So why do I choose the 177 mark? It's because you have declining upper band of now resistance. Should have been support. It was not. And I think that we're going to rally up to that point. After that, where does it go? We're not sure. At a bare minimum, we're going to pull back, maybe get a higher low, or we take out the lows. Who knows? You know, that's not our business. What we want to do is we want to do a short-term swing trade. We're not looking to invest here. So Docusign is a favorable trade. I would entertain using options. When you take a look at the seasonality of the shares, last week is a very rough week, but the final 2 weeks of the year, this only goes back 4 years, keep in mind. So very, very thin data are very favorable. Let's see if we have more data. No, we do not. The next chart up, DraftKings, great company. I guess they're down on earnings. And by the way, we're using TrendSpider. TrendSpider is the Pimp Mac Daddy of automated technical analysis. If you're new to trading and you don't understand where to place your support and resistance levels, use their automated trend lines. You just click a button. And there they are. Let's keep them on. So you can see that DraftKings on a daily time frame is trading with a RSI reading of 16.36. This is a serious company, but it's in an unsustainable downtrend. So what are the probabilities of the shares continuing down lower once we hit a support level? Well, it's not improbable, but it's very likely that we're going to get a short covering rally. Does it hold? Do we break down to new lower lows at some point in time in the future? Maybe, but that's not our goal. Our goal is to take advantage of a short covering rally in, out within a few trading days. Volume, very high on Friday. So I don't suspect that we'll be in the stock on Monday. We may not. It all depends upon volume, price action, where we are on a historical basis. Do we have historical support below? I went over this with members on the week ahead commentary posted in the members area. So if you're a member, go to the members area. I'll go over all the historical support levels for you there. The next one up. And before we leave DraftKings, you know, looking at the price action on Friday and the fact that we don't have immediate support below, we're probably going to head down a little bit lower here. Using TrendSpider and their automated software, they're forecasting a support level at 2165 thereabouts. Do we get down that low? I'm not quite sure about that. We only have 2 years worth of seasonality data here, so it's not worth going over this data. So I'm going to pass on that. The next chart up, Twitter. New CEO, Jack Dorsey, abandoned ship. They're banned. I don't know what they're doing over there. Banning memes, mean memes. This woke stuff is just complete and utter nonsense, but it's our reality. We got to deal with it. Twitter appears to be bottoming out. We have RSI here at 16.58, very favorable. You could see that we blew through many support levels. Here are the automated trend lines here in red, green, and blue. We blew through those support levels like a hot knife through butter. We rallied up into resistance here the week of November the 29th, and then we just rolled over, I guess, on earnings. I wasn't following their earnings. Now we appear to be bottoming out. Let's clear off all these old drawings. Okay, that's better. Let's start fresh. $40.97, looking attractive. 41 bucks. Let's take a look at seasonality going into the final 2 weeks of the year. Again, you get this with TrendSpider. The final 2 weeks of the year are not favorable at all. How many years are we going back here? Let's go back further if we can. Get more data. You always want more data. Okay. So we are here. This is last week, I believe. All right, we have 2 weeks left to go. Actually, no. This is the coming week here. So this coming week is very favorable on a seasonal basis. It's only 8 years, but it's enough data to get a feel for how we're going to trade. Next week is favorable. The following 2 weeks, 50-50. Okay, so it does not dramatically outperform during the final 2 weeks of the year. So Twitter looking attractive. All right, what else do we have here? I'm gonna go over our short last. Let's go over the ARK fund, and this is Kathy Wood's fund. Okay, I talk a lot about Kathy Woods and her ARK funds. I do not dislike her. I think she's a very, very nice person. Where I take issue with Kathy is that she buys way too high. She bought Robinhood at the IPO. I think it's a junk company. I have no idea what leverage they have over other brokerages out there. No idea whatsoever. Their business model is not wonderful. They screwed a lot of customers. So what their competitive advantage is, I have no clue, but she bought them nonetheless. And the shares are getting hammered. They also came up on our screen as an extreme oversold stock. I don't want to touch them. I don't want anything to do with that company. And she bought high on Coinbase and several other stocks. And she was long of Docusign. I think she bought more of Docusign. So, you know, I just take issue with where she buys. Otherwise, she's a very nice person, but nice. You know, she's had very good returns, but nice doesn't get you anywhere in this business. So, that being said, that my caveat out there, because I always feel bad about talking. Not that I'm trash talking her, but I feel like I am. All right, anyway, this is Kathy Wood's fund. A lot of high beta tech stocks in here. So just be forewarned. And we have RSI at 19.22. It just barely makes it onto our screener. The point that I do need to make, though, is that despite the fact that RSI is not down in the mid-teens where I like it usually, or even the single digits, it's a diversified ETF. So that has something going for it in terms of risk. Now, is there only 3 years worth of data here? Yeah, so we can't use seasonality. So RSI qualifies for the shares to be considered an unsustainable downtrend move. That doesn't mean it can't go lower. Quite possibly it will go lower. And that's why when you enter these extreme oversold stocks, always assume that your first, even your second purchase, they're going to be wrong. You're averaging down your price. And a lot of people are out there going, I read Technical Analysis for Dummies. I read Investing for Dummies. They say never, ever, ever average down your price. Usually that's right. It doesn't apply to extreme oversold stocks. You want to average down. You want to average in. I do not average up. Once RSI goes above 20, my competitive advantage is over. My edge is over, especially if I'm using options. I'm looking at the exit door because that means that the share price should be moving up higher with RSI, and we're looking to get out, book profits, make them real. So the key is don't go jumping in with both feet. You want to buy the ARK fund? Great. You want to buy 100 shares? Great. Start with 20 shares, 25 shares, no more than that. Leg in, nibble, 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 and only buy at that historical support level on a weekly or monthly time frame. Again, I'll go over that with members on the weekend commentary posted in the members area. Go check it out, members. So volume is still high. I'm still concerned that we have more lower lows to go here. I believe from the commentary off the top of my head that we're very close to a support level on the ARK fund. How much of a support level will it be? Not quite sure. The market's going to dictate, and the volume bars are still very high, so that's a concern. You have institutional distribution of ARKF. Let's leave off with MicroStrategies. I'm going to go over Bitcoin tonight on Sunday Night Futures Live. Now, MicroStrategies, I'm going to go to a weekly chart here. MicroStrategies is in big, big trouble because what we did last week was we broke down below weekly support. That is no bueno. And that is before the flash crash on Bitcoin. Now, last look, Bitcoin was up this morning, Sunday morning. No continuation move lower. We'll take a look at it tonight, Sunday night. But you got to expect that we're probably going to get a gap down on MSTR this coming week. Now, do I short that gap? No, I do not. What I'm going to be looking for is the inevitable rally back because people are going to think they're getting a bargain, right? This is a psychology of the market. You see this on breakouts. You'll get a breakout, then you get a pullback and a retest of what was resistance. Then we broke out. You get a retest. It's now support. Same thing happens on a breakdown. You break down. Maybe you go down a couple of bars, then you rally back. You tap prior support. Now it's resistance. That is when we want to pounce on MSTR to the short side. Now, when do we know we're wrong? When do we know, hey, we got to get out of MSTR to the short side? Well, this is where the alerts come in. If we break through and we close above on a weekly time frame, we get out. We get out. We do not average down. This is not a trade where you would average down at all. We'll keep this active for a while. Our alert is good. As a matter of fact, I want to know if we touch it as well. So our alert is set here. It's right up here. So our entry point would be a rally back in an effort to recapture this support level. I think that attempt to recapture is going to fail. On that event, we will open up a short position. When do we add more? We don't add more on strength, right? I just said that. We're going to add more on weakness. When we begin to break down below prior support levels, like right here, this will become a support level at around, let's call it $616. We break down to a new lower low below that mark. Well then, okay, the market is validating that our decision to short MicroStrategy is the right decision. And then we'll add more to that trade, if that makes sense. Another way to trade MSTR is to use put options. You could buy put options. You could use a bear put spread. What is a bear put spread? Well, what you do is you buy, let's say an 850 to an 800 strike put. So you're long a put, but they're expensive and it's very speculative. So how do you finance that trade? Well, you sell a deep out of the money put option. So let's say I don't know what the cost of the options are. I'm going to make it up. So let's say the cost of the, we'll say 850 put option is $50 per contract. That allows you to control 100 shares. If it's $50 and you get paid, say $20 for selling a deep out of the money put option at, let's say, 500 strike price. So you're buying an 850, you're selling a 500 strike, and you're bringing in, let's say, $20. So your basis cost for that short is $30. You're financing that trade partially. Now, the only downside to that is that you're capping your profits at $500 per share. Big deal. At least you're minimizing your risk. You're reducing your out-of-pocket expense. So that's the trade that I would be entertaining. Another way, a far more aggressive short strategy would be to sell a naked call and use those proceeds to buy a put option. It wouldn't satisfy the entire amount unless you go out in different calendar strikes. But there's several different ways to trade this. So we have a Slack forum if you're interested and you wanted to talk about strategies on how to short MSTR or any one of the names on this list. Just go to the Slack forum enter your question with a symbol, and we'll war game it. We'll war game out a strategy for you. And that's it, folks. Folks, don't forget, join us tonight, Sunday Night Futures Live. Hit that subscribe button, bell button. Don't forget my 5-part video tutorial on my top 5 favorite candlestick patterns. It's free, no obligation whatsoever, 14-day free trial offer. What else? Oh, Trend Spider, 35% discount code below. What else? Anything? I think that's it. Enjoy the remainder of your weekend, and I'll talk to you soon. Be well.